Imagine this. You're young, you're trying to build your savings, and every single morning you wake up, it feels like some crisis thousands of miles away is chipping away at your future. Well, that's not just a hypothetical. It's the reality for so many people right now. So we're going to break down exactly how a tiny 21-mile strip of water is putting the entire global economy on edge. This quote, wow, it just hits home, doesn't it? It's from a young investor who's just watching their portfolio bleed red day after day. This isn't some abstract news story. It's about real financial pain being felt by people just trying to get ahead. And it perfectly sets the stage for what we're talking about today. You see, what we're all going through right now has a name. Economists call it a systemic geopolitical shock. Now, the key thing to get here is that this is not your typical market downturn. Not at all. It's a fundamental jolt to the entire system, kicked off by a political event that throws everything, from oil prices to supply chains, into total chaos. So, where is this massive shock coming from? Well, believe it or not, this entire global crisis really boils down to one incredibly small but unbelievably important place. 20%. A full 1/5 of the entire world's oil supply flows through the Strait of Hormuz every single day. Now, for a country like India, which imports a ton of energy, any kind of disruption here, well, it means an instant spike in oil prices. And that fear alone is enough to send massive shockwaves through our whole economy. And those shockwaves, they have hit the Indian markets, and they've hit them hard and fast. Let's just take a second to look at the immediate damage, because honestly, the numbers are staggering. Just let that number sink in. 31 lakh crore. That is the amount of wealth that is basically evaporated from the accounts of Indian investors in just a few weeks. It's an incredible figure. On top of that, you've got the Sensex, India's main stock market index, which has plunged 6,000 points. Look, this isn't just a small dip. It's a nosedive that shows just how much fear and uncertainty is baked into the market right now. And it just keeps going. The rupee has hit an all-time low of 94 against the US dollar. What does that mean for you? It means everything we import, from the petrol in our cars to the phones in our pockets, just got a lot more expensive. It hits every single one of us, right in the wallet. Okay, so with this much financial pain, everyone is obviously hoping for a quick end to the conflict. But here's where things get tricky. The research points to a much more complicated reality. Something people are calling the ceasefire trap. It's the question on every single investor's mind, right? If a peace agreement is signed, will that undo all this damage? Will the markets just come soaring back? Well, the tough answer, according to the research, is probably not. It states pretty clearly that even if the conflict were to end tomorrow, the financial damage for the fiscal year 2026 is already done. It's baked in. The hit to company profits has already happened. So why is that? Well, this slide breaks it down perfectly. First, you've got margin compression. Companies, especially in industries like paints or chemicals, have seen the cost of their raw materials literally double. Second, there's the inventory mess. They bought all this high-cost material, and now they're stuck with it just as people are spending less. And third, the FII exodus. Foreign investors yanked a staggering 88,000 crore rupees out of the market in March alone. That kind of money doesn't just come flooding back overnight. So with that pretty grim outlook, let's zoom out a bit. Let's see how this crisis is playing out on the global stage. And more importantly, where India fits into this whole puzzle. And this slide illustrates the split perfectly. You look at the global giants. The EU is staring down a recession because of energy costs. China's mighty manufacturing engine is sputtering. Japan is completely dependent on Middle Eastern oil. And in the US, all that talk of a soft landing is kind of fading away. But then you look at India's column. Thanks to our massive internal market, the studies are projecting a much more resilient outlook. This quote from the studies really just sums it all up. India will be less impacted than them. We might still grow at 6% while they shrink. Now think about that. In a world where major economies might actually be shrinking, growing at all, let alone at 6%, is a sign of incredible resilience. Okay, so what do you do with all this information? We have this complex situation of global risk, but at the same time, relative domestic strength. How should an individual investor even think about this? Well, let's talk about a potential playbook for navigating these stormy waters. The first defensive move suggested by these studies is a classic one: gold. The idea is to allocate about 15% of your savings to it. Think of it like a shield for your portfolio. Historically, when everything else in the world seems to be going haywire, gold tends to hold its value. And here it is, laid out as a clear 3-step strategy. Step 1,
shield and defend. That means gold, like we just talked about, but also maybe looking at defense and energy stocks that could do well in this environment. Step 2, avoid the vulnerable. This is huge. Stay away from sectors that get crushed by high oil prices. We're talking airlines, paints, logistics. Their profits are getting squeezed. And finally, step 3, prepare for the rebound. Because if and when peace does break out, you need to be ready to pivot into sectors like banking and consumption that could get a massive peace dividend from oil prices falling.
Ultimately, how this whole thing plays out really depends on how long the conflict lasts. Because this crisis isn't just a threat, it's a potential turning point. And it could lead to two very, very different futures. Let's just compare the two scenarios here. A short war? Okay, that might bring some temporary relief to the markets, but like we discussed, it's not going to fix that underlying earnings problem for this year. A long war, though? That's a completely different animal. That could trigger a full-blown global recession and could literally redraw the map of global economic power. And through all of this, the studies point out something crucial for India's stability, and it's this. The government is doing a remarkable job shielding the consumers from the immediate impact. This domestic policy response is a key reason the studies give for why India is weathering the storm better than many others. And that brings us to our final thought. You know, in every major crisis, there comes a point where fear is at its absolute maximum, and that's usually when assets are at their cheapest. And it all boils down to the ultimate investor question. When everything is on sale, are you brave enough to see the opportunity hiding inside the panic?